Something massive just happened with Ripple and no one's connecting the dots. Ripple just secured a $500 million strategic investment at a $40 billion valuation. But no one's talking about the institutions that move Wall Street liquidity. And this, my friends, changes everything. One what happened, Ripple announced $500 million strategic investment led by Fortress and Citadel Securities, valuing the company at $40 billion following record growth. Others include Pantera Capital, Galaxy Digital, Brevin Howard, and Marshall Wace. To Fortress Investment Group, once acquired by SoftBank, now managing billions in credit, real estate, and private equity. They're deeply tied to U.S. debt markets, U.S. Treasuries. They don't just invest in companies. They invest in financial infrastructure that governments depend on. Now ask yourself, why Ripple? 3 Citadel Securities, one of the largest market makers in the world. They process 20% plus of all U.S. equities volume. They know liquidity, settlement, and how value moves, so when Citadel invests in Ripple, they're not betting on a token, they're aligning with the next settlement rail. For the Fed connection, Citadel and Fortress have historically helped facilitate repo market operations, the lifeblood of U.S. liquidity. Now Ripple is building repo markets on-chain with DBS Bank, Franklin Templeton, and others, powered by tokenized U.S. Treasuries. That's not DeFi, that's the Federal Reserve's future plumbing, built quietly on XRPL. 5 per Where does Ripple Swift stand now? With Citadel liquidity infrastructure and Fortress credit and settlement backing Ripple, XRPL is now positioned to handle what Swift never could. Instant, atomic settlement of cross-border value. Swift moves messages. Ripple moves money with compliance, finality, and collateralization. 6 The privacy layer, Neon Chain, is building the privacy layer on XRPL using ZK-proof credential systems for permission domains to let institutions verify identity and transaction data without exposing it. It's the missing layer between regulatory compliance and sovereign privacy. 7 The perfect alignment. Fortress equals credit and sovereign debt. Citadel equals market structure and liquidity. Ripple equals settlement and tokenization. DNA protocol equals credentials and privacy infrastructure. Together, they represent every pillar of modern finance: credit, liquidity, settlement, and now ZK-proof layer. Every proof, every credential, every transaction equals earnings for $XDNA holders. 8 per Ripple's $40 billion valuation isn't random. It's not a tech startup anymore. It's a bridge network connecting financial power centers. $95B plus processed in payments. $1 billion RLUSD market cap. 75 regulatory licenses worldwide. That's not growth, that's positioning for monetary control. 9 The lawsuit was the smokescreen. While the world argued, is XRP a security? Ripple was quietly building partnerships with BlackRock, Citadel, Franklin Templeton, and central banks. Gary Gensler had given a presentation on digital ID on blockchain, and after the lawsuit, Ripple is building its own privacy layer through ZK proof. Coincidence? The real game wasn't regulation. It was integration. 10. And here's the twist. The same entities that built Wall Street's liquidity machine are now wiring it into the blockchain via Ripple. It's not decentralization, it's reconstruction of the system itself. And this time, it's programmable. 11/11's Ripple just went from being a crypto company to being the engine of monetary transition. While others chase ETFs, Ripple is quietly tokenizing the U.S. Treasury system itself. This is the blueprint of the new financial order. The switch is about to flip.